Welcome everyone to the Learn From Us podcast, videocast, webinar class.
You've been calling it a podcast.
Yeah, I like podcasts.
I do too. Number 2.
Now I did.
How would we do 2 of 4? How could you record the second one?
I'm here with Paul Gabriel as always. The
am I
man, the myth, the legend. I brushed my beard this time.
It looks very nice.
And I can see you have your lifts in your shoes.
I do.
Today. So we talked last time about sort of introduction to what you're into and what you're trying to do. And I think I'd like to ask you some questions. You're a big fan of writing. I'm not, but you write things on your mind. What do you love writing about?
What's exactly on my mind? I just write, everything I write is literally as it comes off my mind. There's very little editing that I do. I send that to other people and say, hey, make sure this sounds clear, make sure you get this, but I just write what's on my mind.
So I didn't realize that Paul Allen died this week.
Yes.
What do you think of him?
From what I understand about the history of Microsoft, he didn't get the publicity that Bill Gates got, of course, but everybody called him the accidental billionaire, but I think that's more because it was more of a hating thing on him. He seemed to be quite the visionary. He didn't make great investments after Microsoft. I think he took a lot of big write-offs, but he was a very big humanitarian in terms of, he loved music. I think he started like the Jimi Hendrix Hall of Fame or the Jimi Hendrix Museum or something like that in Seattle. So, I think it's sad that he got Hodgkin's lymphoma when he was like 30, then again later on in 2009, and then last month. And then last month he said something like, oh my, we've made a lot of advancements in the last 9 years, so hopefully it works out well. And then boom.
65.
Yeah, and then Alex Spanos died this week, and he was the owner of the Chargers.
That's right.
94 years old, 95 years old, something like that.
How did he get into his money? I don't even know.
His parents were immigrants. He worked for his dad. He asked his dad for a raise. I read his book, The Spanos Way, back in 2002 or 3. He asked his dad for a raise. His dad said, go after yourself. And so he left, and he started selling sandwiches to guys who were working in the fields or something. And he made a ton of money doing that. And he started buying real estate, started building apartment buildings, and fast forward, he's a huge real estate mogul, and then he owned the Chargers back in 95 maybe, or he bought him in 88. Maybe he bought him, I don't remember. He owned him for a long time though.
So you do love Microsoft as a corporation.
I do.
And their history.
I do.
And I love the story you tell about this lunch you had talking about Microsoft. Maybe tell a story to me.
So back in the 90s, Microsoft was the company, right? It was Microsoft and Dell. I don't know if you paid attention back in the day. It was like, if you wanted a computer, you bought a Dell.
Sure.
If you wanted anything software related, you bought Microsoft. And Bill Gates back then wrote his book. I think it was in The Road Ahead. He wrote that in 20 years, the number one tech company in the world will not be us, and it probably doesn't even exist right now. Now, back then, Google did not exist, but Apple did exist, but in a completely different form. So he was right in that sense. But that was the company. And the stock went to an astronomical level. Bill Gates, I think in 1999, 2000, was worth 100 billion at one point, and now he's worth roughly that again. But over the years, the technology started to suffer, and people didn't think it was quite the sexy company anymore, and Apple took over and started to make better things, et cetera. But the one thing I noticed about the company was revenue kept going up 8-9% a year, and profit kept going up 11% a year, very consistently, and their balance sheet was awesome. Tons of cash on the books, a lot less debt than they needed. It was just phenomenal balance sheet. And I kept looking at it going, this company is selling for 8 or 9 times earnings. Every other tech company is selling for 30 times earnings. Why? Perception. And it was validated for me in a 2010 or 11. So I started buying it. The stock went as low as 13 in the 08 crash, 09. I started buying it at 22. I was just like, the value investor in me said, hey, this is a company that's growing revenue, growing earnings, and they're expanding, and they have a great balance sheet. I'm going to own this company. So I had a lunch with a guy who ran the big startup place in Cleveland. And I brought up what I thought was a sarcastic question. He said something about, we were talking about investing, and I was like, well, like Microsoft. I'm like, clearly, if you could Oh no, he said something about like I'd never owned Microsoft. I go, well, I mean, of course you'd own Microsoft at a certain price. He goes, no, I don't think I would. I said, so you're telling me, and thinking full well this is being sarcastic, I said, you're telling me if you can buy Microsoft for $50 billion and it has a net $100 billion in the bank, so you could literally shut it down tomorrow, pay yourself back the 50 and have an extra 50 billion left over. You'd buy it then. No, I wouldn't. Literally that matter of fact. I go, no, you're not understanding. I repeated it. He goes, no, I wouldn't. He goes, technology is too cyclical. That company's dying. It's over for that company. It's not going to be around for very much longer. I remember leaving that meeting. By the way, this is my personality. I never spoke to him ever again because I just lost all respect for him.
Yeah.
Because it's the guy in charge of investing for a major Cleveland entity that involves the startups. And that was, I bought it at 22, 23. That was probably when it was like 32, 33, and now it's like 107. And by the way, I sold at 55. Nice work. But there I thought that inside, like, oh my God, this guy is an MBA. He's in charge of investing, and he wouldn't invest in a company that literally, if he thought it was absolute shit, he could shut it down the next day and still cash $50 billion in profit in one day. And he still said no. And that's when I realized perception versus reality. I was like, holy cow, this guy will never get it. We talked about value investor. Sometimes they just get it, sometimes they don't. And I'm sure people watching, I'm sure a lot of them are going to say, no, that's really stupid. Because that was so obvious. He's like, no, I would never do that. I was like, wow. And that really blew my mind, Seth.
What's the biggest difference in your mind between a value investor like yourself and someone that you would argue with?
So that guy is on a different stratosphere altogether. Like, he's not even a normal, I mean, even if I asked 100 regular investors, that's the question, I got to think 95 are going to answer, yeah, of course I would do that.
Yeah.
Because that was so obvious. A value investor, their goal in life is to buy $1 for much less. And the way that happens is that they have to look against the grain. They have to sit there and say, why do people not like something? And is there basis to it? Is there merit to it, or is it just a perception thing? That's what I saw in BP after the oil crisis, Royal Caribbean after the, or whichever one, after the boat flipped.
Yeah.
And Microsoft. Just going, okay, but there's fundamentally still a good company here. Like BP, for example, they lost $80 billion in market cap on what was going to be a $20 billion at most fine, and they had $40 billion in net cash in the books. I'm like, they could just write a check off their books tomorrow. Nothing would change in the business, and the market might have $80 billion in value for it. I'm like, that doesn't seem right. So I look at those things, and that's what a value investor does. A value investor has to look at people's perceptions and say, okay, how are these perceptions wrong? And how does that affect the price of the asset, whether it's real estate, stocks,
How
bonds?
does it transfer to real estate?
Oh, it's the same thing. Everybody would sit there and say location, 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 right?
Yeah.
My job is sit there and say, okay, if everybody else wants the primo location, what non-prime locations are being ignored because of that I can go pick up for a lot less money and a lot more profit. That's it. And realizing when I look at everything, that all in all, they're probably going to go up in value pretty similar amounts, and definitely not, even if the other one, the location one, will go up in value faster, it's not enough to justify the huge premium you're going to pay here. As an example.
You talk about this in your webinar.
Yes, I do. For example, like New York City, Manhattan, which is one of the few places I can sit there and say, I can see why rents would go higher there, because you can only go up, you can't go out. A property that makes $1 million a year in profit would sell for $30 million. Here in Cleveland, that same property would sell for $14 or $15 million. So the question becomes, is that $30 million asset that's going to lose money day one in cash flow going to appreciate enough to make up for that loss? Maybe. But to me, why fight the negative cash flow? Why do that for so long? I don't know. That's the whole point of a value investor. How can I secure my capital and buy an asset that's perceived to be a lot worse than it actually is?
So you're trying to market toward new investors who need a little hand-holding, someone like myself, and as I've said before, a lot of my friends. And I keep getting these conversations with my friends. It's like, well, what is the starting point when you take someone on as a real estate consultant, a consultee?
I don't know what the word is.
You know, like, where do we start? Without giving away the farm, like where do we start?
No, first thing is, what are your goals and why do you want to achieve them? The why is so important, because if your why is just, I want to make money, I need to know that. I'm okay with that,
Yeah.
but I need to know that. If your why is, I might grew up with my parents fighting about money all the time and I want to make sure my kids never see that, that's a lot different than I want to be rich as hell, you know what I mean? It might be a comfort level. And it's about, the first level is breaking back the layers of saying, what is it that you're trying to accomplish? How much is enough? How much do you want? All these things. And that way we can sit there and say, like if you said to me, Paul, I want to own 10,000 units in a year. Well, Seth, unfortunately, that's not going to happen. Let's try to be realistic. I believe in having big goals. So it's understanding what you want and why. That's the very first step. That takes me 2 sessions alone. Because me saying to you, what do you want? You're not going to get it right in the first time. Because you're going to say something and I'm going to say, okay, but why? I mean, how many times have you said to me, Paul, I want to make more money. Well, how much more?
Yeah.
Well, I don't know. Okay, well, shouldn't we know? What's more?
Yeah, I had this unique conversation with my brother-in-law last night, and it's like, I want to make enough money so my kids don't have to worry as much, but that worry would probably not propel them to, like me, to try and be more than they can or be the best version of themselves. And so I'm almost like I'm trying to work really, really hard so my kids don't have to work as hard.
So Warren Buffett says that he wants to leave his kids enough where they can do whatever they want, but not enough where they can do nothing.
Yeah.
It's a good thing to say.
Sure.
Everybody's different. Everyone's different. There's all across the board. I mean, I have friends whose parents will sell them a car and charge them Blue Book. And there's my father who'd be like, yeah, just take the car. I don't care. You know what I mean? And he was always that way with us. And we still grew up very motivated and very ambitious and very hardworking.
Yeah.
It just all depends on what you want. I mean, like I told you in the last podcast, the hard part about having money is when do you really learn the hard lessons of struggle?
Yeah.
There's other ways we struggle, but it's not like not being able to pay the bills or worrying about, how the utilities going to stay on or how you're going to pay for a school or how you're going to pay for a car. It's a different struggle.
I think you told me this. I always thought it was fascinating, the idea that everyone wants to have money, and along the same lines, everyone laments rich people.
Yes.
And rich people are undeserving of that car or that vacation.
Yep.
And so it's definitely changed my mind is when you I look at wealthier people different. Like, man, it must have taken a lot of freaking effort to get to where you're at.
And guess what? There are a lot of awful wealthy people.
Yeah.
And there are a lot of awful middle class people. And there are a lot of awful poor people. People are awful. People are great. It just is, somebody once told me, money magnifies. And I thought that was the best statement. If you're generous.
I love when you say that.
Yeah. If you're generous, you become more generous. If you're mean, you become more mean. If you're nice, you become more nice. All these things. But it's so funny because we always want everybody to do very well in life. But the second they hit it, they don't work hard. I mean, watch every movie in the world. The hardworking person is not the CEO. The hardworking person is not the rich person. The hardworking person is always the factory worker. All these, and it's funny because there are definitely hardworking all across the board. There's definitely lazy all across the board, right? Yeah. There are things I'm very lazy about, right? We talk about that. We talk about things that people would look at me and go, "How are you so successful? You like to sleep in?"
Lots of sleep, lots of chess.
Like my tennis coach texted me and goes, "Hey, let's do Saturday 8 o'clock." I said, "No chance." I literally wrote 0 with like 8 O's after it, chance. And he goes, "Come on, Paul, successful people get up early." I'm like, "Not this successful guy." I'm like, "I do not do it. I wake up at 9:30 at the earliest on the weekend. I just like to sleep in."
I mean, some would say you now have the ability to do that.
I did it back in the day when I was still working 70, 80 hours a week. I still slept in on the weekends. If you get things done, it doesn't matter. What does it matter? If you and I had the task of moving boxes from that room to that room, and it took you 3 times longer than me, are we going to revere you saying, "Look how hard you worked"?
That's what happens.
And that's what I do at Walsh. When I teach at Walsh every other Friday, every year now, I do something where I ask a random kid in the class. I say, "Get up, walk to the door." I don't tell them how path, walk to the door. And what do? They walk in a straight line, right to the door. Then I go all around the room in this weird convoluted path that takes 10 times longer. The first time I ever did it, I asked everybody, who worked harder? And everybody said me. And I was like, really? I said, well, you took longer. I'm like, this is what's wrong. That we revere somebody who took more time to do something even though it didn't take more time. It didn't need more time to do it. We revered somebody who worked dumber, not smarter.
Yeah.
If it's the shortcut, it's the way. Remember when we were in calculus? We had calculus together, you probably don't remember. We had calculus. Do you remember when we learned derivatives? This is very important.
Derivatives, right. I mean, yes.
Do you remember what a derivative is?
I probably couldn't write it out on paper at the moment, but...
What's the derivative of x squared? Do you remember?
2x?
Correct. All you do is take the exponent, put it in front, and then subtract by 1. But if you remember the first time we learned it, it was a long, complicated equation.
That's right.
And Anna was in our class, and she raised her hand, and said, Mr. Petrus, my brother taught me a faster way to do it. And he just went like this. He goes, that's the next chapter. She's like, well, then why don't you just like, I need you to understand why we're doing it this way. But do we do it the long way? No. We still do it the shorter way. He did the right thing of saying, I still want you to understand how we came up with this, but do we ever do the long way? No. Why? If there's a shorter way, it becomes the way. But we revere people who take more time and sit behind a desk and say all these interesting things about like, oh, well, I work so hard. Well, why do you work hard? Well, I'm behind my desk all the time. I can sit behind my desk all day long, put my feet up, take a nap, play chess all day long. If you want me to sit there for 90 hours, feed me food, I'm good. Right?
Yeah.
Get things done.
That's helped me. That idea has helped me. And part of it is caring what other people think of you, like, I care less about what, I joke around as a photographer, videographer, and marketing guy. It's like I pick up my kids from school and I look like I'm homeless. I pull up in the Tesla.
Yeah, exactly.
But I'm wearing gym shorts and, so.
By the way, did you cut the wood behind my house today? Is that what you did? The lumberjack?
Oh, yes, thank you.
It's very beautiful.
You say you like this shirt.
I do like this shirt. I mean, I can't pull that shirt off.
One podcast will switch.
I'll buy a beard.
I wear a little that size sweater. And you can wear this.
That'd be wonderful.
Well, so the last topic I have to get your thoughts on. I work a lot with a company called Focus 3.
Absolutely.
Brian and Tim Kite.
Yeah.
And they have an amazing sort of view on younger folks nowadays. I know you hire a lot of young folks upstairs. Again, going back to this conversation I just had.
Not being ageist at all. Go ahead.
They are younger than us.
They are younger than us.
I'm always entranced with the people's older workers and older folks' mindset of what millennials are nowadays and their work ethic and their perception. And I'd love to hear your thoughts.
Every generation to the beginning of time has said the next generation is a bunch of entitled, spoiled brats.
Remember when the Beatles were wild, long-haired, wild?
I do not remember that because I was.
I don't mean to say it like that, but yeah, that's what, initially I think like how wild the Beatles were in 1950,
so risque.
68. Yeah. So, yeah.
It's every generation, every single time. I'm a big person of history. I go back and read. It's what a value investor does. A value investor will sit there and say, I need to understand the past to see what today means.
Yeah.
So I look at the past and I read books about in the 1930s and 40s written by investment guys, and they're worried about the devaluation of the dollar. They're worried about immigration. They're worried about deficits. Does that sound familiar? Every election, everybody talks about abortion as the biggest thing in the world.
Yes.
Has it ever changed?
And no one gives a shit. In between 4 years, no one gives a shit at all.
And it won't change. Yeah. But we always make these things. Every generation says the next generation is lazy. The next generation is this. Now, I blame older society for why the millennials are the way they are. You don't have to make these kids this way, do you?
Brian Kite.
He
says that they didn't entitle themselves. They didn't give themselves 8th place trophies.
There's no entitlement gene in that body of yours going, God was like, there's gonna be a thing called entitlement someday, and I'm gonna put it right there.
But my father-in-law, he had something to say. He said, in terms of work, they might not necessarily want money.
I've heard that.
They don't want overtime. You and I don't know about you. When I growing up waiting tables or working those shit jobs, if they said overtime, I was like, oh my God, yes.
Yeah.
Time and a half, let's go. Saturday, Sunday, let's rock. The more and more I talk, my brother-in-law said he's probably 30, and he says he's going to retire in 10 years. They bank half their money right now, and they only need to live on about $40,000 or $50,000.
More power to them. That's wonderful.
But the point is that we were talking about the driving force to make more money that you may not need. And so that was my thought. It's like, I say this to older folks, I just can't figure out why they don't want to work. They don't need money. They're not valuing it. To
me, that's not a bad thing. Why is that a bad thing?
I'm not
saying you are saying that, but why do the older people say that it's a bad thing?
I think they might have a hard time hiring them.
I'll tell you this.
They're going to have to.
We've hired a lot of younger people. Have I sensed entitlement? Absolutely. But have we gotten some hardworking? Absolutely. We've gotten some great. I have an easier time with high school and college kids than I do with some of the $10, $12, $13 an hour people we hire at the properties.
Yeah.
I mean, I sit there and go, wow, these kids, I mean, and that goes back to one thing, how are you raised, right? And that's all it is. I mean, do they want money? And of course they want money. I mean, we have a salesperson upstairs who's rocking it, and she wants to make as much money as possible,
Yeah.
right? So I look at these things and think, every generation, it really, really irritates me because every single parent will say it to me, and I'm like, guess what? Your parents did the same thing about you. No, they didn't. No, yeah, they did. Well, you guys have, all these devices, and you guys had the Commodore 64, whatever stupid game there. You guys had TVs with 3 channels. Your parents didn't have TVs with 3 channels. You guys have 300 channels. Well, you had 3.
Yeah.
It doesn't sound like a lot, but your parents had 0. You guys had a car in the house. Your parents didn't have a car. You might have had 2 cars. Your parents had 1 car. That's the whole thing, and it's like every generation says it, and I'm just sick of it. Just like grade inflation. Grade inflation, every generation says the next generation has easier time in grades. Probably it's true, by the way. But the point is, you guys are in charge. It's not the kids in charge. You can lead them a certain way.
Yeah.
Right?
Yeah.
It's on us. We're not the ones, like he said, if we're not the ones making this entitlement, I'm sorry, they're not the ones making their own entitlement. We're the ones making the entitlement on the younger people.
Yeah, I'm trying to gain interest in what you're trying to do with your web class, especially from mid-25 to 40-year-olds to get going. And so tell me one more time, what are you doing on Thursday nights?
So we're doing the webinar, web class, to discuss how somebody can achieve their financial goals. And I'm kind of sitting there saying, how does 25,000 become 11 million over a 30-year period? 25,000 a year becomes 11 million, and that's extremely possible. But I bring that example up because maybe somebody like your brother-in-law says, you know what? I don't need 11 million. Great. But for somebody who does want 11 million, I want to show you how that's possible. If you want more than 11 million, it's just a math calculation.
Sure.
But for somebody like your brother, he just says, you know what? It'd be wonderful. I'm 30. I want to retire at 40. It'd be great if I could have 20 units at 40, and I only need 40 grand a year to survive. Those 20 units might provide 30 of that, or the entire thing.
Well, that's what I told him. I said, Paul's stressing even one good deal a year.
Oh, yeah.
I mean, a lot of people think I don't have time for this.
Yeah, maybe they don't.
Yeah. But I'm thinking, God, one, I mean, we certainly have time to figure out one. And so,
You know what we have time for? What we want to make time for.
That's true.
That's what we have time for.
Yeah.
Right? That's it. Whenever people say, like, I'm too busy, I'm like, no, don't say you're too busy. We're all freaking busy. What you're saying right there is it doesn't matter to me. I'm okay with that. But don't mask it around something else.
Yeah.
That's the same thing about these classes. The big reason I created them was I want people to value them by paying a good buck to value them. You know what I mean?
Yeah.
If I'm gonna spend my time to care about you, you better spend your time and money to care about what I'm trying to teach you.
I said the same thing to my wife this morning. I mean, obviously I do photography and...
Was this on your 3-hour jaunt to get a Starbucks coffee?
Well, that's the whole point. It did take me almost 75 minutes to get a Starbucks coffee this morning.
You just got an ad for Starbucks. You're like the most dedicated
Here's
Starbucks.
the point.
Okay.
And I understand why you're charging, a premium for your services. And I do the same for my photography services.
Of course.
I asked my wife, if someone handed you a $6 cafe, latte, Starbucks with all the, and a 99-cent Dunkin' Donuts, which one are you most likely to finish? Or which one are you most likely to throw out if you were in a rush?
Yeah.
People can value, by paying more, there's more value in it. I care more about this awesome Starbucks cup than that crappy after church coffee, And so one thing I'm trying to like show in the photography community is people can actually be happier by investing more in something and valuing it more.
It's supposed to be the most beautiful day of their life, right?
Yeah.
Now I'd make the argument of probably having a kid is probably more beautiful,
Sure.
but whatever it is, the whole point is, this is gonna be a beautiful day for you, and go spend some good money and make sure you have better photos. And what that means though, Seth, is you can't just take $1,000 quality and charge $6,000 and expect to get that, right? You're charging a premium because your quality is better.
Sure.
I've shown your stuff to people that are like, holy cow, that's pretty good. Same with us.
Yeah.
We're not just charging it to say, oh, you know what, we think it's worth this. I'd make the argument of saying, hey, what's $11 million worth to you?
Yeah.
That's probably worth a lot more than $25,000, $50,000 to you today.
Sure.
That's the whole point. It's about building that. Your responsibility is to build a value. Mm-hmm. And going back to your comment about spending money, Tim over here, I wanted to buy him a book. He got mad at me for paying for it. His comment was, I'm not going to value it if you pay for it. And I said to him, I'm paying for it, and you'll value it because I'm going to make you feel guilty if you don't read it, right? And he did that, and he read it, and it's the Bible to him. Yeah. That's the people. There's a lot of people out there that value things, and one of the things I want to instill on my niece and nephew when I have them someday, we have one niece, is it's okay to spend money if it means you're going to care about it more.
Yeah.
I do believe in that very, very much.
And this book was the Kama Sutra. Listen,
Tim's gonna blow up by you saying that.
You've been great today.
You've been equally as great.
Okay, guys. Thank you for joining us today, everyone. Hopefully you're getting something out of this ridiculous nonsense we're talking about.
Yeah, it's pretty good.
But an explanation of what Paul's trying to do with his real estate consulting and how you can benefit from it. So,
Can I say one thing?
go, Paul.
The major thing is watch these things as it goes along, because as the market starts to turn and people start speaking this venom of how bad the market is, you're going to hear the exact opposite from us.
Yeah.
And it'll be nice to have a refreshing, optimistic look at the world. Now people look at me and say, I'm a downer of the world. I'm not a downer, I'm just responsive to valuations.
Yeah.
Same thing will happen when things go bad. I will be very optimistic, saying this is not going to last forever. Might go a little bit longer, but it won't last forever.
Yeah. Well, I'm excited to see what you can do for these folks, so including myself.
And it's on its way.
All right, thanks, man.
Thank you.
See you. So you just got an update on your phone.
Just got an update on my phone.
Tell me about it.
So the update said that the Fed has announced they see a strengthening economy and therefore a reason to raise rates. So as a quick backstory for those who don't understand, the Fed keeps rates low when they want to boost the economy, right? They sit there and say, hey, we want more spending, we want more lending by banks. So how do you do that? You drop interest rates. It makes rates easier for you and I to borrow and grow our businesses and buy homes and other things, right? So rates have been at huge lows. I mean, the 10-year Treasury average since 1871 has been about 4.5%. And in the last few years, they got as low as 1 point some percent, right? The thing that's interesting to me, Seth, the value investor in me looks at it and goes, okay, the justification for paying really high prices for real estate and really high prices for stocks and other assets was, well, rates are so low, I can justify it because I'm not getting a return from those treasury bills, those treasury notes. Okay, great. But when they're that low, do you expect them to be low forever? And people were valuing things like real estate and stocks, like those rates are going to stay that low for 40 or 50 years. And that's actually the calculation. When you have rates that low and you pay that much more for an asset because of it, you're assuming the rates are going to be high that long. The converse would happen. If rates went to 15% like they did in the early 80s, would you sit there and pay even less amount of money saying rates are going to be that low, going to be that high forever? No. But it's amazing to me that people miss that. They say, if you're going to buy an asset today based on rates being this low, do I think 10 years from now they're going to be lower or higher? Could they be lower? Absolutely. 11 years ago, I thought rates were going to be lower than they were back then, and they're higher than they were back then, and they're lower now. But people are always looking at rates as such a short-term thing, and to me, the rates were the most obvious things of saying, these are going to go up over time, but yet we're paying nosebleed prices as if these are going to be rates forever.
Yeah.
And that's what always confused me. Does that make sense what I'm saying? Because I look at that saying, this is why we have asset prices that are so high.
Sure.
And now when the Fed starts raising rates, what are they going to say? Prices are going to start going down. They're going to say, well, wait, rates went up. It's like, did you not see that they were going to go up? They were at the lowest rates since 1871, 147 years. And you're telling me it's like a shocker to you? You know what I mean? It's like, to bring an analogy about marriage, if you always cheated on your spouse, but you always got away with it, and then one day all of a sudden you got caught, should you be floored when all of a sudden they're pissed and they're divorcing you? No, you were cheating all the time. You're gonna get caught eventually. Same thing, interest rates stayed low. If you made all your purchases based on low interest rates on a time period of 40, 50 years, and all of a sudden the next 40, 50 years, and by that I mean the next 4 or 5 years rates go up, you can't be shocked. You're gonna be like, oh, well, that was expected. The value investor makes their decisions based on what they expect the future to be like. Investors that we deal with, the society's investors, they seem to act on what's going on today, right now, and that's it. But a good value investor will sit there and say, okay, what's reality versus what's perception, as I said earlier. And to me, the reality is rates are low today. But the real reality also is rates are less likely to be low today, 10 years from now than they are today. That's not going to happen probably. Could I be wrong? Absolutely. Could it cost me some money? Absolutely. But you play poker. If you had pocket aces on every single first hand, whatever it's called, pre-flop, and you bet all in every single time on the first, before the flop came out, would you win some? Yeah.
Yeah.
Would you lose a lot more though?
I think a quarter of the time.
And that's the point.
Yeah.
The point is that A value investor sits there and says, I may be wrong here, but if I invest this way 100 times like this, I will be right more than I'm wrong.
Yeah.
And that's the whole point. Interest rates going up, I can't wait for interest rates to go up. I'll be so happy when rates go up. And every investor out there should be happy because it allowed them to buy good assets at much better prices than today.
Nice.
Thank you.